Good morning. Let's do a quick recap of what cost price of inventory is all about. And let's have a look at Boa Vista. Boa Vista, we have to assume a VAT rate of 14%. Boa Vista is a registered VAT vendor. They imported 50 color inkjet printers from China. The cost price of the printer was 900 Rand each, exclusive of VAT. And then we have to deduct a 20% trade discount from that amount still. The VAT-exempted import charges incurred by Boa Vista were customs duty of 10,000 and clearing agent charges of 200. Additional, and they tell us here VAT-exempt, so no VAT on those two amounts. Additional freight charges from the harbour paid by cheque amounted to 2508. Now that freight charges will include VAT. They give us the amount paid. Remember, every time that you see an invoice amount or amount received or amount paid, those amounts will all include VAT. So that 2508 is a VAT inclusive amount. Boa Vista traders sold 25 printers at 1368 each, will include VAT, and they only took one printer home for personal use. Another 10 printers was sold to a business in Johannesburg for 1482 each, inclusive of VAT. These printers were delivered to a client at a total cost of 570 Rand. The salespeople at Boa Vista are paid a commission of 5%, excluding VAT, on all printers sold. Sales, nothing to do with the cost price of the goods, so selling expense. Now, number one, calculate the value at which the entity must disclose inventory in the statement of financial position according to IAS 2. So the first thing that we have to determine is the cost price of these printers that we have acquired, and then we have to determine how many of these printers are still on hand at the end of the period, and then we must determine what was the original cost attached to those printers. Good. So let's decide what is the cost price of the printers that we have bought. We have bought 50 printers. The original price, 900 times 80%, because we received a 20% trade discount, plus 10,000 Rand customs duty, plus 200 Rand clearing agent charges, plus that amount divided by 1.14. So the number of printers was 50 printers. The cost price per printer was the original 900 Rand. I've deducted the trade discount, so I could have said 900 times 80% times 50 would have given me that 36,000 as well. Customs duty was 10,000. Clearing agent charges was 200, and then the freight charges, the VAT exclusive amount was 2,200. So the total cost price of those 50 printers was 48,400. The unit price was 48,400, obviously divided by the 50 printers that we have purchased, so that gave us 968 Rand per printer. How many printers did we have on hand at the end of the period? We purchased 50 printers, we have sold 25 printers, the owner took one printer for himself, and then we have sold another 10 printers. So at the end of the day, we had 14 printers on hand. We have already calculated the cost price per printer, so 14 times 968 will give us a total value of printers on hand at the end of the day of 13,552. The B part of the question asks us calculate the gross profit to be recognized in the statement of profit or loss. Now, gross profit we know is sales less cost of sales. Now, sales, we have sold 25 printers at 1368. We must remember to take out the VAT. We have sold another 10 printers for 1482. We must remember to take out the VAT. Now, let's quickly have a look. 25 printers, take out the VAT, gives us 30,000 Rand. 10 printers gave us 13,000 Rand. How many printers have we sold? We have sold 35 printers. What was the cost price per printer that we've sold? 968 Rand per printer. What was the total cost of sales? 35 times 968, 33,880. So our gross profit on the printers that we've sold based on that would have been our sales 43,000, less cost of sales of 33,880, which gave us a total of 9120. Now you can easily ask, what about the printer that the owner took for himself? And there we know that we would have adjusted inventory, and you could clearly see that we did adjust the inventory figure because we only said here that the cost of the printers on hand at the end of the day was 14 printers, and in that 14 printers we already recognized the one printer that the owner took for himself. Good, then the last part of the question, provide the year-end journal entry if the remaining printers could only be sold for 1,100 Rand exclusive of VAT, if additional advertising of 200 Rand exclusive of VAT is incurred. Now clearly this is all about my net realizable value adjustment. Now the first thing that you should make a note of is that when I work out my net realizable value, I have to exclude VAT in my calculations. Always, always, always. So if I give you the selling price inclusive of VAT, I have to take out the VAT first. If I give you compulsory selling cost inclusive of VAT, I have to take out the VAT first. Now in this question, the VAT has already been taken out of all those figures. Remember, this additional advertising cost is a compulsory cost because I say that these printers will only be sold if I incur the additional advertising cost. So my net realizable value is going to be, it's 1,100 less 200 Rand compulsory selling cost, which gives us 900 Rand per printer. What is the cost price per printer? 968 Rand per printer. So therefore it's clear that we have to do a write down of 68 Rand per printer. How many printers do we have on hand at year end? 14 printers. So 14 times 68 give us a net realizable value adjustment of 952 Rand. The entries that we're going to pass in our books, we're going to debit a net realizable value write-down expense account with 952 Rand. We're going to credit our inventory account in the statement of financial position with a 952 Rand. So we're physically going to write down our inventory at the end of the year with 952 Rand. Now at the end of the year, we're going to transfer this net realizable value expense account to our cost of sales account because this is trading inventory. We only transfer trading inventories, net realizable value adjustment to cost of sales. So we will debit cost of sales and we will take that one out of our books. There was a debit entry. Here we're going to pass in a credit entry against the expense account to take the expense account out. Effectively, you can see that our cost of sales will then increase with 952 Rand.